Today, folks, we're going to be experiencing some extreme uncertainty, which comes with extreme volatility, which makes me a super giddy dividend investor because with volatility comes major discounts. And many of you might be aware I have been stacking cash fairly aggressively. We're going to do a portfolio overview. I'm going to share with you how much cash I have actually stacked, what I plan on doing with it all. However, that does not stop me from purchasing stocks, as going into the end of October, I received more dividend income than I have ever received it, which I reinvested into some pretty controversial companies. We are going to get into all of that and so much more. And I also wanted to shout out one of you beautiful buggers because David wrote a book basically about tapping into your home equity to build up some passive income that he calls the Gush Maneuver, in which he actually took some of my teachings, kind of applied it to this book, and he even shouts me out. So if you guys want to check this out, you can actually buy it on Amazon. So thanks so much, David, for sending me the book. I do appreciate it. But in light of all of this and the clarity of my transparency, do me a favor, hit that like button and let's jump. Welcome back, my passive income investors alike. So before we get into the stocks I'm literally buying right now, I think it's very appropriate to do a quick portfolio overview because thanks to the volatility of the election going into Friday close, my portfolio dropped roughly 5% down to $190,929. But this isn't enough volatility for me to be inclined to start spending that cash that I have been so aggressively stacking. As many of you know, I've been selling a lot of stuff around my house. I sold a used car and I've been able to build up about $4,294, and which is just going to sit there and I'm going to keep building it up because, like I said, guys, a 5% decline in some of these companies, not nearly enough. I would love to see like an overall 10 to 15% correction in the markets. I can pray, I can believe, but doesn't mean it's going to happen. So I've been mainly just reinvesting dividends, which going into the end of October, I received the most amount of dividends in any single month in my entire investing career, at which I brought in $899. And I'm hoping many of you are going to stick around for the day that I finally get to say I've received $1,000 in one individual month from dividends here, folks. But I don't want to get too into the overview because I really want to talk about the stocks that I bought with those dividends, along with the stocks that I am desperately awaiting to buy here, folks. So getting into the first brokerage account being my tax-free savings account, where I've done most of my purchases with dividends, and I've also gotten a little bit more cash in here. I think you guys are going to be kind of shocked to the stocks that I decided to purchase, at which I also turned off all of my drips. And the only reason I decided to do that was to continue diversifying because I really love these companies. I want to buy more of them, but you know, leverage is your best friend and your worst enemy, and I cannot continue to over leverage myself into some of these companies. And the only way I can show you the stocks that I bought was through the transaction history where the drip was set up, which obviously I bought some BNS, CM. Many of you know I am aggressively buying the Canadian banks. I added TD, which I actually plan on buying more in the next week or two. But nonetheless, guys, where most of the shot comes in is with GEO Group. I have a love-hate relationship with this company. It is one of the cheapest it is the cheapest REIT in the entire real estate sector of the market. They have great cash flows. I think it is going to be a sustainable company long-term, but in the near term, thanks to the election, this company has been absolutely slaughtered, and I picked up 11 more shares, in which I am currently down, again, my worst position of all time, about $4,042 or 54%. Not that I really care who wins the election, and not that past history represents future performance, but this is a stock that typically does well when Trump wins. And even when Biden was vice president during the Obama era, guys, they were still very beneficial for the private prison sector. But unfortunately, politically, you know, the rhetoric surrounding prisons right now, absolutely terrible. You know, if it's coming out of my dividend income, it is technically my own money still I'm allocating here, but you know, these will be the last shares I will finally buy of GEO Group. I'm just going to set it. I'm going to take that cash that I currently get out of it, and I'm going to start throwing it into some other companies here. But in this account, those were some of the stocks that I purchased. I also got a little more Northland Power, though again, guys, I'm highly leveraged in this thanks to the incredible performance and the run that this has gone on, making it one of the largest positions in my portfolio. I do believe it is overvalued here, but I cannot foresee myself taking capital gains. It is one of the first stocks I ever bought in my entire investing career. I have heavily been loading on RioCan still. Like I said, I have that set up on a drip for the last couple months, guys, at which we can see if we scroll down here, I managed to buy 3 more shares in this account, and I also, in my managed account, picked up a few more shares because I got a lot of Ryokan sitting in here at a very beautiful price point, which I was able to pick up. How much did we get here? Roughly another 5 shares on the reinvest. But again, guys, this makes up a huge percentage of my portfolio right now. Just taking a look at the allocation assets, we can see that Ryokan right here makes up a whopping 12%. But again, keep in mind, $4,500 of that is leveraged, which makes me probably sound like a broken record because I tell you guys this pretty much every week to the OG subscribers out there, but I really need to start deleveraging, not by selling the position itself, but just by taking my cash and my dividends and start adding new positions to the portfolio, because obviously as new positions get scaled, it will scale down the percentage weightings of the rest of these stocks, which you can also see Northland Power makes up a whopping 11% right here, guys. And also, as some tidbits in the managed account, guys, even though I am stacking cash, I will have to pay taxes going into next year, and I figure I'm going to allocate as much of my cash to dividend stocks, and I may do something I did in the past, which I actually used Facebook to actually pay my taxes. I'm not sure where I'm going to be mid of next year, but I always have this kind of infliction being self-employed that I hate seeing my tax dollars sitting in a high interest savings account, whereas I know I'm going to have like another 7 to 8 months before I have to pay my own income tax, and I always hate just leaving it there when I know if I put it in Facebook, the chances of me making maybe a 10 or 20% return over that time frame is highly likely. So that is another big inclination to start itching me to spend some of my cash. But like I said, guys, I'm really hoping we get a further sell-off. Now, finally, I can show you my RSP account. Haven't done anything here. I've just been collecting the dividends, which there's not a huge amount of because J&J and Pepsi are very small percentage pairs. I mean, J&J 2.5%, Pepsi 3%. And luckily, if you guys were so fortunate to actually pick up some of those shares on the dip, these are a couple of the stocks that I would recommend anytime they dip to buy them. These are ones that I would not hesitate on because they are just staples, obviously. We did, however, see some further volatility in Tesla dropping to the lows it hasn't seen in quite a little while here, back down into the low 400, high 300 range. Not that I care because I've kind of got this set up at the point where I'm probably never going to touch it or sell it in my retirement account. And hopefully, you know, in the next 3 to 5 years, things really work out there. I'm crossing my fingers. I love my Tesla stock. But taking a look at my RBC account, this is where I added my TD position that I'm going to be scaling. And I will, like I said, be buying this month over month. I really don't care what the price point on this is going to be because, like I said, guys, in about a year time frame, I'm hoping to move out of my current living situation where I really want my dividends to be like a security blanket in case I ever have to tap into it. I could really use those bank stocks as super reliable dividend income to pay my bills at any point in time. But nonetheless, those were the stock purchases I made throughout my multiple accounts. I do not have any drips set up in my RBC account. I did receive some BNS dividend payments, which were kind of nice. We are going to be getting some more Ryokan payments. And like I said, I'm going to keep aggressively stacking that in here, which I will take that dividend income along with my own working capital to buy some more TD here, guys. And then finally, the stocks that I am desperately waiting to buy, I will be purchasing likely at some point in this month. And I'm kind of annoyed because they're already starting to recover. And of course, we're talking about Unilever. Many of you keep asking me, did you buy it yet? Did you buy it yet? And no, I did not buy it yet because I only want to pick this up in my tax-free savings account thanks to the tax implications that come from being a Canadian buying US stocks, which we could see with GEO, of course, as well. Luckily, in my TFSA, I don't pay any income tax here, guys, but I do pay the over-the-border withholding tax, which we can see on my dividends. I paid $18.87 in that withholding tax. It doesn't make any sense to be buying US dividend paying stocks in a regular Canadian brokerage account because not only do I pay withholding tax, I pay income tax and obviously the capital gains tax, which gets kind of annoying because that eats into some major amounts of my dividend income. So not going to be doing that in my brokerage account, or I would have already bought Unilever or Kimberly-Clark, which is the second one on my list. Everybody knows this one is probably on the best discount right now, and I'm making a bit of a prediction with this company that I think people overbought going into this pandemic. They loaded up on some of the supplies that you'd be buying from Kimberly-Clark when we're talking about toilet paper and tissues, which going into the third quarter, I think people weren't purchasing as many of those products due to the oversupply that they had, which is why in the midst of the pandemic, this company did so well, and why going into the back end of this pandemic, it might not be doing so well. But I really appreciate this because it is one that is currently on my buy list right there with Unilever. And then finally, let's just take a look at what is going on in the markets today. And it looks looks like the further volatility is still pulling these stocks down, because as soon as the markets open, everything was pretty much in the green. I mean, we saw a lot of recovery in a lot of these tech stocks, at which now we're seeing a sell-off into the afternoon, which, crossing my fingers, everything continues. Yeah, guys, it is going to be a super fascinating week. Putting those stocks aside, we are going to be doing a live stream Wednesday morning after the election to see what happens to the stock market over at our live stream channel on the Passive Income Educator. If you would like to join us and just have a really open discussion watching the volatility in the market open, I'd really appreciate it. You head over there, consider subscribing. It does support our channels as well. But in light of all of this, stay cool, stay awesome, and I look forward to chatting to you guys tomorrow.